And right now, folks, as we do each and every Tuesday at 30 past the hour, we're going to talk to our man Tim Ord. You can reach Tim at his website every trading day at ord-oracle.com. And don't forget, folks, he's got a couple of outstanding webinars right under the services tab: The Secret Science of Market Tops, how to identify market tops, as well as the 6 secret ratios every trader should know. We talk about some of those ratios here sometimes during these segments. Tim Ord, good afternoon.
Good afternoon. Good afternoon. So quite a bit going on. Let's take a look and we'll dig in here to the market real quick. This is the S&P's SPY going back, I don't know, until July, and I labeled them where the ticks and trend closed in bullish territory, and actually over, not counting today, but over the last 6 days, they all reached bullish levels. And yesterday was 1.31, day before 1.23. We even had a tick reading a couple of days ago, and actually those are bullish. That's a short-term bullish sign. That's putting energy in the market to the upside. Trend closes of 1.2 or higher predict panic, and panic only forms at lows. So that's the energy of the market pushing this thing up. How long it's going to last? I marked the other times here when the S&P closed above. This is the Bollinger Band right there, and if you get a close above it, which we are today, the last 3 times you get a consolidation, not necessarily major tops, but usually slows the decline. The last time that happened, we got a pullback for about a week. This one went sideways for, I don't know, a week and a half before it took off again. So I'm thinking probably next week's option expiration week, which normally leans bullish. So I'm not chasing a rally. There's a couple of reasons why. This is one of them. This is the SPX tilt ratio. Normally, this ratio leads the S&Ps. And even though the S&Ps is hitting higher highs, I updated this today, so it's pretty current prices. But over the last several days, the S&Ps is making higher highs, not too much higher than the previous high, but this ratio really just went right through the floor. And that's pretty telling. Normally, the ratio kind of leads the S&Ps. And here's another thing here, too. This is making that point again about closing above the upper Bollinger Band. That's going on right now. But if you look at the top there, this is the SPX tilt ratio. That's the ratio. Actually, I did. I wanted to show the VIX too, and evidently I didn't put that on. But you can see the ratio really going down, and the SPX VIX ratio is also showing a bearish divergence. So I think the whole thing's a rising wedge. I think next week is probably more of a sideways move. I don't think it's a top. I think the week after you may get the pullback down. I think this whole thing's kind of a rising wedge that you get back to 620 during shorting during expiration week's never been a good idea. It's just too many things going on. But I think it's with your above the upper Bollinger Band, and even though you do got trend and tick closes actually bullish, those are kind of short term. So I don't know. I'm out of the market. I was long a little bit, made a minor profit, and I got back out. This is not the time to be extremely bullish going into year end. I think the next pullback you may be, but September, October are kind of landmines, so you kind of got to watch what happens during this time frame. So I'm kind of being careful. But I bet we get a pullback either this month or next month at 620, and I think that's the time to really lean on the longs. But with these divergences on the divergence on the SPY tilt ratio and the divergence on the SPX VIX ratio, both those things are showing kind of the same reading. They can be early, but they give you a warning why you're going into a top. It didn't really pick out the exact top. They just warn that you got something coming. And so I'm kind of being patient here, so I'm out of the market. So, but not long term. Just a pullback, and I think before the year end, we'll still see higher highs higher than currently we are right now.
And,
So
just to add to it, what's remarkable is, I'm looking at the charts, it's great. And, 620 on the SPY, it seems like a long way. We were there August 1st, which is crazy.
yeah,
And here we are just
yeah.
the beginning of September. So all things in context, right?
Yeah, everything's in context, and everybody's kind of bullish here. I'm starting to get emails and stuff, which I don't know. I tried to long, and it's just they kind of knock you out. So but anyhow, I don't think this is time to chase the market. I'll put it that way. 620
Okay.
when everybody's afraid. That's the time to get long, and I'm always a pretty good, what they call, I guess, a knife catcher. When the market's plummeting, a lot of times I can get pretty close to the lows. Not always, but normally I can, so I know what to look for. But I still think that's 620, and I'll change my story as we go forward here. If things change and we don't have a shot at 620, or we may
Sure.
May 6 or 620, we may even shoot below it a little bit, whatever.
Okay.
But the market gives you clues as you go forward.
Yeah.
And right now it's I don't know, but let's take a look at the gold market.
Let's
This
do it.
is this is really interesting what's going on here. Your dad and I talked about this for about a year, that we thought something big was coming, and the big thing is coming. And I was long the GDX. I got kind of bored with it. Anyhow, it went up too quick. I thought we'll get a pullback. Was short at 55, covered around 60, and I should have flipped back to long. And actually, I want to show the chart that I didn't get to show on Tuesday. This is we got a couple other charts to show, but this is momentum chart of the up-down volume. And this is a 50-day average. Sometimes I show an 18-day average, a little bit shorter. I even got a 5 and 10-day average. But this thing is actually hitting new highs here.
Yeah.
This thing's been going straight up. And this never gets in a sell signal until you get below zero. We're never even near below zero. So what this says is the up volume is way exceeding down volume. And that's the definition of an uptrend. Can you get too exuberant to the upside? Not really with this chart. Even the advanced decline one, which is the next one up, is the 50-day average advanced decline. We're pretty much setting at the highs here if you go back. I hear the music, so we'll come back
Perfect.
to
If you
it.
can hang there, because I saw when you were talking about, what was that chart? We had the HUI gold ratio. Is that what we're
Yeah.
looking at? I can't wait to go
we'll
over
look
that
back
one,
at those.
folks.
Yep.
All right,
We'll
I
take
saw
a look
those
at
trend lines breaking. Folks, we're coming back. We're going to talk about some more gold. You got gold right now. $36.75, down $6, $36.75. We're coming right back with Tim. Stay tuned. Welcome back, folks. We have the S&Ps up 56 points right now. And we just hit 65.9825 on the futures right now. Markets green across the board. How about the Dow up 1.3% right now? Russell up by 1.7%. We're talking to our man Tim Ord, and we're going to talk some gold, as you have gold pushing those numbers. All right, let's get into it, Tim.
All right. Well, so anyhow, this is kind of a short-term view. As long as this indicator, which is the up-down volume advanced decline indicators, hold above zero, which obviously we are right now, we're actually hitting new highs new highs for this year, as far as that ratios goes. And what that says is this is the strongest part of the market, even though it has rallied. We still have a lot of strength in the market, and that strength will continue until this indicator backs off. When will that back off? Don't know. It could last for, as long as it holds above plus 10, that's that dotted line going across there, the uptrend's intact. So how long it's going to last, don't know. We talked about another indicator. I think it was the 18-day average of down volume advanced indicators. And when it gets above 42, which it did, I was projecting a surge in the gold market, and it appears that's what's going on. But the funny thing is, I'm not long GDX, but I am long a lot of gold stocks. Let's take a look at the bigger picture, what's going on. So I think you have to flip and look at the bigger pictures, because a lot of these short-term indicators like RSI, even on the monthly time frames, are just pegged to the top. So they're not really helping you any. So you have to look at other indicators trying to figure out where you are in the market. Well, this is one of them. This is this chart goes back as a weekly chart of the XAU gold ratio. Anything below 0.12, which we talked about earlier in the year, is a buy signal. And that's it. That's all these shaded pink areas are times when that ratio is below 0.12. So it worked well over the years, and it actually stayed below 1.2 for looks like about in June. Finally, you're somewhere in June, it looks like, and now we're finally above it. So, but when it gets up to around 0.17, which we're quite a ways along from it, and may not even get there. But that's kind of a warning sign the market's getting extended. And all the purple area are times when that happened. And actually, only last time it happened was 2022. And so even though the market's a lot higher, that ratio is not. So the ratio measures basically is kind of how gold stocks are it basically measures the value of the gold stocks against gold.
Yeah.
So it's kind of are gold stocks cheap or are gold stocks expensive?
Sure.
Well, gold stocks are cheap when it's below 0.12, and gold stocks are expensive going back to 2013 when it's above 1.7. Doesn't mean 1.7 you're at a top. No, sometimes you can go higher. But when it gets up there, gold stocks are starting to be expensive according to history. And right now, it's still not a problem. So let's look at another one here. This is the weekly silver gold ratio, and actually it's still below 0.12 right now. And I marked the times in the past when this ratio was around 0.012, I guess you might say 0.012, and I marked the times in pink when that was below it. Picked out that low. That was decent low, and it actually stayed bullish, and actually still bullish. And you get expensive when it gets above 0.012. And I marked the times and picked out the top in 2011. Some minor tops along the way. So you got two longer-term indicators that have not reached maximum overbought or a maximum overboughtness, I guess you might say. So on a bigger time frame, gold stocks still have room to run, even though if you look at a monthly RSI on XAU or GDX, it's just pegged up there. Well, it may stay pegged for a while. I don't know. But on a bigger time frame, people are just starting to realize gold stocks are running. One of my favorites, I put this on my PowerPoint before, after I sent it to you one. I wanted to send it to you, so I'll just show what this one is. But this is a silver stock, DVS, and it goes back to 2012. And anyhow, I want to point out it had a base of about 10 years, just went sideways.
Yeah.
And this is what this is not a rising wedge. It's kind of hard to see, but it's the same pattern as ATRO, which is basically a parts company for cars, and it has the same pattern, and it broke out. And it's KMI is another. So I look at patterns that mimic other patterns and see what they did. And both of them had really huge runs breaking above their trend lines, and this one's just starting to break above its trend line right now. And I think it's got a projection anywhere from 8, maybe 12, which is basically this high back here and this high back here. Maybe it'll exceed that. I don't know. But what I wanted to point out is this right here. This is the sign SOS, which is a sign of strength. And both these patterns in ATRO had it, and along with KMI had it. And this is even bigger. So this is just the beginning of a run to the upside. You're breaking a 10-day trend. So even though a lot of gold stocks have run their course maybe for a while, then go into consolidation before they run again, this one's just starting. And so it's a 10-year base just breaking above this 4 level, which is basically you need to see a sign of strength through a previous resistance area or previous highs. You need a sign of strength, and obviously this is what that is. So how big a rally? I think at least 8. Maybe we get lucky, maybe go to 12, and maybe even beyond that. I don't know. But this is an early stage of a breakout that shouldn't last for a month. So I wanted to point that out. If this was GDX, I'd be buying that right now. But GDX is in the stratosphere, and how can it keep going? Yeah, on one of your shows, I think I projected a 3 to 6 month rally from the current breakout. So I don't know. It could be fast and furious. We'll have to wait and see. But a lot of these gold stocks that have been basic for a year, haven't moved, and you see this big surge in volume without the stock going very far. Like here, there's plenty of them out there. There's one below this. I didn't want to put it on because it squunched the chart down too much. But it says TNR.B has the same exact pattern, and I think it's a 10-cent stock or something. Will it work out? Maybe, maybe not. Maybe they go bankrupt. But anyhow, the pattern's similar. So
Sure.
I'm kind of pointing that
And you
out.
mentioned that was a silver stock too. Man, these silver stocks, I mean, the First Majestic's up like 10% right now. Hecla's been on a heck of a run, to put it,
Yeah.
So boy, there's some movers for sure, man. Well,
Yeah,
Tim, I appreciate
There's going to be a big rotation, I think, out of the big ones. That they may not pull back much, but they're going to come back and pick these smaller ones up. And I think that's what's been happening here. So we'll see how that works out.
And I don't know if you saw it. Did you hear the beginning of the show when I was saying Bloomberg had an article that gold actually took out the inflation-adjusted high of 80 when gold was at $850. So even versus back then when inflation, I mean, it's just quite a run. Tim, thanks for the great information, man. We always appreciate the update. We look forward to talking to you on Tuesday. Have a great weekend, okay?
All right. Thanks a lot.
Thanks so much. We'll see you on Tuesday. Folks, check it out. Oracle.com. Got a couple great webinars under the services tab at TFNN as well. We'll come right back.